There is a strange thing happening to your money right now. Not the obvious inflation you hear about on the news, but something quieter, deeper, almost invisible. A slow erosion that no one wants to call by its real name. You feel it every time you buy groceries or check your savings account, or wonder why your salary just doesn't stretch the way it used to. And yet, you're told everything is normal. But what if the real story is hidden in the places most people never think to look? Before we dive in, do me a favor and tell me something in the comments. From which country are you watching this video? It really helps to see how this silent shift is playing out all around the world. The truth is, currencies rarely collapse overnight. They fade slowly, bit by bit, a fraction of a fraction at a time. Until one morning you wake up and realize your money just doesn't buy the same life you once had. Governments prefer using softer words for this, like adjustments, rebalancing, or monetary policy flexibility. But the real impact lands squarely on ordinary people who never got a vote in the decision. It's subtle by design, because confidence is the foundation of every single currency. The moment people lose trust, the entire system cracks. So instead of admitting that the value of money is slipping, policymakers package it as a strategy. They call it stimulus, they call it modernization, they call it anything but what it really is. A quiet devaluation. Most people only notice the symptoms, not the cause. Prices go up. Savings don't grow fast enough. Debt becomes easier to borrow, but so much harder to escape. People find themselves working more hours just to maintain the same lifestyle. Companies shrink product sizes while keeping prices the same. And the average family starts wondering why the future feels heavier than the past. But if you trace all those symptoms back far enough, they all point to the same root. The currency underneath everything is losing weight. To understand why this happens, just imagine a massive scale. On one side, you have the real economy, all the production, jobs, innovation, and resources. On the other side sits all the printed money. That's chasing those things. When the money supply climbs faster than the economy it's supposed to represent, that scale tilts. And even though nobody rings a warning bell, you feel the imbalance in your daily life. Now, governments often expand the money supply for what seem like legitimate reasons to handle a crisis, manage national debt, or stimulate the economy. But every expansion has a cost, and that cost is shared collectively across millions of people who did approve the decision but have to live with its consequences. That's precisely why the topic is rarely discussed openly, not because the mechanics are complicated, but because the implications are deeply uncomfortable. If leaders admitted what was really happening, people would demand answers, alternatives, and accountability. Instead, the hidden devaluation continues quietly in the background. Silent, steady, almost polite in its growth. But here's the part no one ever tells you. This hidden devaluation isn't just an economic event. It's a psychological one. When people feel their money weakening, they start to change their behavior. They delay big purchases. They start chasing higher returns, often with much higher risks. They lose confidence in their savings and start looking for assets they perceive as real estate, foreign currencies, crypto, anything that feels more solid than the melting floor beneath their feet. And once that shift in mindset begins, it feeds the cycle. Less trust leads to more instability. More instability leads to more monetary adjustments. And more adjustments just accelerate the very devaluation that no one wants to acknowledge in the first place. Yet, the average person is not powerless in this situation. Understanding the pattern is the first critical step. Recognizing the signs early is the second. And acting strategically before the crowd catches on can change the entire trajectory of your financial life. But before we get to that, there's something even more surprising about all of this. A twist that explains why this devaluation isn't an accident, but a tool. And once you see it, you will never look at your currency the same way again. Stay with me. Have you ever felt like you're working harder and harder, but your money just doesn't go as far as it used to? You're not imagining it. and it's not entirely your fault. The real turning point in understanding your finances comes when you realize a shocking truth. Currency devaluation isn't just something that happens. It's often a preferred strategy by governments. Why would they do this? It's simple. Every government on Earth carries massive debt, and the cheapest, quietest way to shrink that debt is to let inflation slowly eat away at its real value over time. It's like a soft reset button, cleverly disguised as economic management. This is the big twist. The steady decline of your purchasing power isn't an accident or a bug in the system. It's a feature. When you hear about stimulus packages, quantitative easing, or deficit spending, these aren't just tools to boost the economy. They are also mechanisms to make yesterday's debt cheaper to pay back tomorrow. And who pays the price for this strategy? Do. Not in one big, obvious hit, but in a slow, creeping drain on your daily life. Your grocery bill gets higher, your rent increases, and the value of your retirement savings quietly erodes. Once you understand this mechanism, the entire financial world starts to look different. You begin to notice the subtle clues all around you. Interest rates that don't even come close to matching the real rate of inflation. Wage growth that constantly lags behind the rising cost of living. And financial advice that always seems to focus on staying calm and riding it out while this silent loss continues. A question I hear all the time is, how can this possibly keep going? The answer is surprisingly simple. It continues as long as the public accepts these small, incremental losses in silence. Most people don't take to the streets over a 3% or 7% loss in purchasing power each year. They adapt. They adjust their budgets. They normalize the feeling of being a little bit poorer. That normalization is the most powerful tool governments have to maintain the status quo. But here's the other side of the story, the part that most people never see. While this silent devaluation can be harmful, it also creates incredible opportunities for those who understand the pattern and act early. Think about it. When money becomes weaker, certain assets become stronger. Not all assets, of course, but the right ones, the ones grounded in scarcity, real-world utility, or long-term demand. For example, real estate tends to rise in value as the currency it's priced in falls. Commodities like gold or energy act as anchors in a storm of monetary expansion. Holding strong foreign currencies can offer a refuge from a weakening domestic one, and certain businesses, especially those tied to essential goods and services, can thrive during these periods. The key isn't to panic and try to fight the current. The key is to position yourself to surf the wave. People who not only survive but actually thrive during these periods of quiet devaluation tend to share three distinct habits. First, they focus on tracking their purchasing power, not just prices. Instead of asking, "Why is this coffee more expensive?" they ask, "Why did my dollar lose the power to buy what it once could?" This shift in perspective is crucial. Second, they diversify their assets early, not late. They don't wait for the alarm bells to ring and the crowd to rush for the exits. By the time everyone is scrambling to protect themselves, the best opportunities have shrunk, and asset prices have already surged. They move before the herd. And third, they remain emotionally steady. Panic is the absolute enemy of a good strategy. The biggest financial mistakes are almost always made when people react out of fear instead of acting with a clear understanding of the long-term patterns. And these patterns have repeated for centuries. This hidden devaluation is not a new phenomenon. It happened in ancient Rome when they debased their coins. It happened in Europe after the World Wars. We've seen it happen again and again in Latin America and during the Asian financial crises. And every single time, the people who saw the writing on the wall early had the chance to protect themselves and their families. The world today is not collapsing, but it is shifting. It's shifting quietly, continually, and, if you know what to look for, predictably. Once you recognize this shift, everything becomes clearer. You stop blaming yourself for feeling like you're falling behind. It's not a personal failure. You stop assuming you just mismanaged your budget, and you start to see the pattern for what it really is. A structural, deliberate, and strategic monetary cycle. The hidden devaluation that no one in power wants to name is already here. Acknowledging this fact doesn't make you a pessimist. It makes you prepared. It makes you an informed participant, not a passive victim. So as you look toward your financial future, ask yourself a simple question. Are you going to be someone who waits for the news to tell you what has already happened? Or are you going to be someone who learns to read the signs, understands the game, and acts before the rest of the world catches on? If this video opened your eyes even a little bit, let me know in the comments. Share your thoughts and help others wake up to what's really happening behind the economic curtain. Thanks for watching, and don't forget to subscribe for more content that pulls back the veil.